Good morning, everyone. This is Mortgage Pros 411. I'm Audrey Boissineau with Kevin Casey, and today we are joined by Mark McArdle, one of our favorites. How are you doing, Mark?
I'm good. I'm good. It's a cold winter's day in DC, but I'm
Oh,
good.
that's interesting because we had our coldest day in 103 years in San Francisco on Sunday. And I just want to give a guess. How cold was it
The coldest
this
day
Sunday?
ever, or the coldest day for
Coldest
that
day in
date?
103 years.
I'll say it was 29 degrees.
Try 50.
Oh my God.
Okay, so just for the record, in the winter, it is colder where I live and warmer where Kevin lives and in the city.
But
So
in the
the closer
summer,
the
it's
ocean you are,
still
the warmer it
50.
is. What?
In the summer, it's still 50 degrees here.
Exactly. His temperature is like in a 5-degree range throughout the year.
Well, it might get up to 59.
Okay, well, you can hope for that. All right, so before we dive into it, a couple little things. We actually have a few economic reports this week. Tomorrow we have ADP. They're expecting 10,000 job creations, which is
10,000.
a little anemic, but we'll see what happens.
That's
The-
beyond anemic. That's what, how many hundred per state?
Well, you know what? Our population's decreasing. Don't worry about it. Okay,
Uh-huh.
so Friday we have PCE for drum roll, September. Where are we again? Oh yeah, December. So they're expecting a 3/10 increase on headline and 2/10 on core. But again, this is like a lifetime ago in September. So I don't know what the
Wait. What are the numbers they're expecting? How much for CPI?
PCE,
PCE, okay.
3/10 for headline, 2/10 for core.
Because
So
just as a lark, I looked up the history of CPI just for
okay,
the
which
sake of,
by the way, in other news, is canceled for October, and November's release is due for December 18th. So we'll see if that happens.
so we just will never know.
Well, we may or may not.
Yeah.
So,
But we'll just average it because that's just what you
yeah,
do.
your average. What was the average over the life of
So I
CPI?
pulled up the CPI for the last 25 years. And our current CPI is at, for the year is 3.9. And when I looked on the stat, that's what it said. I'm not making the numbers up. 3.9 for this year. Maybe that was maybe the last report that came out. But anyhow, I was looking at the chart saying, well, how many times has it been over 3.9%? And it had been like 25% or no, let's see, 20% of the time it had been over 3%. And then 10% of the time it had been under 2%. So we're kind of right in a nice range where it's the 2% to 3% range.
Okay,
Uh,
we're at 3% in September. You must
yeah,
you must have been looking at UK. Seriously. The UK
maybe.
CPI is at 3.8%. Um, okay, so PCE for October, we don't have a release date. So it's going to be interesting because the Fed is meeting on the 10th and or they're going to release their decisions and their dot plot on the 10th, which typically is quite the market mover, and I'm sure this time will be no different, but what are they going to do? A few weeks ago, the odds of a December decrease were like nothing. And now the last number I saw was we were at an 80% chance of the Fed funds
Uh-huh.
down in December. So who knows? Who knows, right?
I had an interesting conversation with my kids. They have a new uh, what's it called? Ritual. The Saturday after Thanksgiving, all my kids and all their cousins get together, and their significant others, and there was like 12 of them all together for dinner, and they went around the table, and of the 12 kids, they're not kids, I call them, they're all in their 30s. Only two had were fully employed. Two of the
Wow.
12. Yeah. They're
God,
like,
is that just in your family an issue, or is that like a representative of
well, because I talked to other kids and in that in their friends group, and it's the same thing. It's really hard.
I'm not
So
hearing that from my kids, but holy
yeah, but
crap.
yours are right out of school. It's a little different. Mine are
This
more
is this is pre-AI. Wait till AI kicks in, then there'll
Well,
be
I mean, okay, so my first of all, I have three kids, and one of them is 38. And by the way, he pinged me yesterday saying, Mom, we want to meet with you because we want to buy a house. We need to plan and see. And I'm like, okay, 38, you'll get in right under that 40-year first time
Uh-huh.
average age, right? Um,
Yeah.
but the other two are, I mean, like, yeah, I don't know. They're friend. I mean, this job market reminds me very much of the job market coming out of the meltdown, where the college kids were having a hard time finding jobs. Like it is not easy to find a job right now, but again, my kids' friends are working and they're working at like Amazon and Google and
Good.
like that. So I don't know. We'll see. I mean, yeah, we'll see. We know the job market is soft. We know this. This is not, this is
Mhm.
not new news. This is old news. And so
And you guys are in the Bay Area, which is tech focused. I mean, the rest of the country probably has it harder.
yeah,
Well,
I have
if you're not in construction,
Yeah, yeah,
uh,
the data centers.
healthcare, or what's the other one? Hospitality. Everything else is kind of like a little bit in the doldrums. So
I have one kid in tech and it's interesting.
yeah.
Okay, so just I keep mentioning this, and this is all I've got to say today. NMLS. Have you? You should. That's it. Let's keep going.
Oh, well, actually, I got a add on that. So, because last Monday I paid my 4 different licensees, and only 2 so far. So, California DRE was bing bang, like instantaneous. Like they must not do any background check or whoever becomes a DRE people because it was bam, bam.
You've
Like
already done this.
I sent them the money. They said you're approved. That's all it took for them. If that check cleared, that was their, it must have been their standard.
Yeah.
Uh, and then Washington approved me like on Friday, but Oregon, not a word, not a peep. And then the DFPI, I haven't heard from them either. So
The FBI has launched a full investigation. Everyone that you know has been
that must be
contacted by
it.
them for our assessment on whether or not you are worthy of a DFPI.
I think that's it.
And
Yeah.
I think that the odds are not good. So,
Yeah.
all right. So, Mark, how are you doing over there?
I'm good. I'm shuffling my papers.
Yeah. Watch it. Be careful though, because there's a Subway sandwich coming your way.
Did we
Yeah,
I
keep
just
you
whack you upside the head.
too
I can
long?
smell the onion and the mustards.
That is very traumatic. Okay. So, but not apparently, a criminal offense. So, Beige Book, Fed released their Beige Book. That's where the 12 districts talk to their business contacts. And it was very similar to the previous report, but they'd gone from 4 districts in decline to 6 districts in decline. And again, labor markets are weak, just in case we weren't clear on this, right? Okay. Black Friday spending online up 9% from last year. It broke records. Can you believe that? So here's my takeaway from that. First of all, either everyone's buying everything on sale and the rest of Christmas retail will suck, which we'll see, or people are putting everything on credit cards and we are going to have one amazing cash out refinance January, February. What do you think? Cash out
I like that
refinance
idea.
February? Are we thinking that? What do you think, Mark?
I don't like that, but there you
Yeah,
go.
no, I heard
Wait, why don't
record
you why
Black
don't you
Friday.
like that? Mark, tell us.
I don't like. I'm one of those debt averse people, so I don't like
Oh,
putting lots of things on credit cards and then hoping it all works out.
okay, so Mark
Hmm.
are at the other end of the spectrum, and we have many, many examples of this, including but not limited to the fact that I was willing to do a GoFundMe page for you so you could turn on your air conditioning in the sweltering, humid, hot as Hades, Washington, D.C. summer when you didn't want to go to the office, but you didn't want to pay for air conditioning. So anyway, we won't even talk about Duolingo. So yeah, I mean, it's not good. I'm not suggesting this is a good thing. I'm suggesting that this is our reality. Credit card debt continues to grow at alarming rates, and people have
Car
all at
defaults are a
home.
problem too.
Pardon me?
Car payment defaults are rising.
Definitely. So people are strained. We've been talking about it for quite a while, actually, and it's not getting better, it's getting worse. So yeah.
But you know what happens when this happens? People adjust. They either pick up another side hustle, they start cutting expenses, they sell something, they make things work. And a lot of times like people would change careers because of the situation, the economy like this, when they would have just stuck out the crappy job they had the whole time. But suddenly that crappy job isn't even paying the bills anymore. So okay, I got to go take that college course, or I got to go take this class, or I got to stretch myself to get more money and make more money. And
So I will
yeah,
throw in a word for frugality. In frugality, there is freedom. Like, my grandmother saved every piece of string and whatever. And then if you want to control your financial future, frugality is one way to do it.
yeah.
Can you help us understand the difference between frugality and cheap?
Uh, I think I use the word frugal, but my partner sometimes calls me cheap. It's potato.
Yeah, your
So
part.
I just got off the phone with a realtor. Okay, listen to this story. So the buyer is thinking about buying a house, but then totally disappears on the real estate agent. And he's looking at buying a house. And he wanted to do $1.5 million cash sale, right? And then he comes back, and all of a sudden, like it's 2 weeks, he's just disappeared. She thinks, I don't know where he's disappeared. I don't know what's going on. She was texting him, no reply. He must have just ghosted me. And all of a sudden, he texts her back, goes, sorry, I was in Mexico and didn't have an international plan. And I'm thinking, how can you have $1.5 million in the bank and you couldn't afford the international plan that would cost you what in Mexico? It's an extra $20. I've gone there lately, but it's like when you go to Mexico, it doesn't really add much to your cell phone bill. Like if you go to Europe, it's $100, but Mexico is like 20. Canada.
That reminds me of I was talking to someone yesterday and he was telling me about who, I don't know, somehow he knows somebody who manages a fleet of expensive private jets.
Hmm.
So these are extremely expensive airplanes, and to maintain them is not inexpensive.
Yep.
The person in charge of them got a call from one of the owners who owns a $45 million private jet. He was complaining about the price of peanuts. And you know what that is? That's operating in scarcity. That means that you are thinking, okay, like getting caught up in the little minutia like that is nuts. Because
Supposedly, Warren Buffett would use
that's
coupons to go to McDonald's. So, I mean, I don't know. There's a lot
Warren
that's.
Buffett go to McDonald's and live to be this old. I don't even understand that. Okay, so on that note, NBA mortgage apps came out for the week, as they always do. That didn't stop during anything. Okay, purchases are up 8% week over week. We're in December, guys. I mean, I guess that was
We're in Thanksgiving week.
that.
There's just as many things purchases going on during Thanksgiving week.
Yes, and they're up
Wow.
20% year over year. Refinances are up 6%, or sorry, not up. They're down 6% week over week, but up 117% year over year. So again, there's business out there, and if your business doesn't reflect increases over last year, that means it's you. I mean, I hate to be the one to have to tell you this, but it is what it is. So that means that you've got to embrace new things, do things differently. It doesn't work to just sit in your office and wait for the phone to ring, does it, Mark?
No.
No. Oh my God. Okay, so according to Nick Timrose of the Wall Street Journal, who has been said to be the Fed mole, he's the one who seems to get all the Fed information ahead of time. It sounds like maybe Kevin Hassett is going to be our next Fed chair, which,
Like I said, Kevin's going to be Fed chair. I
yes,
told you a long time ago.
excited about this, no matter which Kevin it was, for months. So the markets seem to be liking this. So what will be interesting to watch is what happens next, right? So we were told we'll hear before Christmas. It sounds like we'll hear much before Christmas if Trump is already talking about, the fact that they've chosen a Fed chair. That I don't know. It's hard to imagine that they're going to keep that under the wraps for too long. So we'll see how that goes. In other news, Apartment List came out with their new rents. This is 47% of the market are new rents. And a big, big part of our inflation numbers are rents and shelter. So they were down 1% month over month, 1.1% year over year, with a 7.2% vacancy rate. That is high, and it's been at that rate for a while. This is the fourth month of decline in rents. But the reason I mention this is always forget this, and it's good to remember the BLS surveys, they survey 1/6 of the country at a time, which is why in those inflation reports, there's always a shelter lag because they're always really behind. And I've mentioned this before, but honestly, I'd forgotten myself. So it's a reminder for all of us that when we're watching those inflation numbers, the reason that shelter number is off from what we're seeing in the open market currently is because the BLS does, again, 1/6 of the country at a time. So we're always behind.
So you're saying that not only do they ask different questions to get different answers depending on your inflation numbers, different agencies, but they also ask different areas of the country at different times.
Correct.
They couldn't ask the same percentage of people across the entire country all the time to get a stable number.
For all we know, they're sending out, people who are making minimum wage and stopping people on the street to take this survey. So I don't know exactly how it happens, Mark. We had a very interesting conversation with a labor economist who ran the part of BLS for years that produces the numbers. And so we got the straight scoop from him and why there's such a huge gap between the job numbers that are released monthly and then revised by BLS and the QCEW, and the answer was the questions being asked are not the same for those two numbers. It's astonishing, honestly.
Well, and anything that relies on a survey, there's always this issue of response and who responds. And, like your political surveys, the response rate's been plummeting for years now. And then you get they wait and try to do things on the back end to fix it, but it's never that reliable.
Yeah.
Yeah.
Well, I think it was something as simple as one question asked, are you collecting unemployment? And the other one is, do you have a job? It was something like that. It was like, well, those are two completely disparaging answers because
yeah, it was a great conversation and really interesting information to have.
Recommend people go back and watch that episode.
Yeah, I don't know if it's on our YouTube channel at this point, but hopefully. Okay, so pending home sales for October. Signed contracts on existing homes were up 1.9% month over month, down 0.4 year over year. It's increased for the last 4 months. So the trend is better, which is great. And October was actually the highest pace of the year. So to have increasing pending sales in October is encouraging, right? It's really encouraging, I think. What do you think?
I love his response, and he's really putting a lot of thought into this.
He's got his cat under his feet. He's probably petting him or something like that.
NAR came out with a 4% appreciation estimate for next year.
Yep.
And then I was listening to a report in the Wall Street Journal, and they're saying that commercial properties are expecting a 7% return on their investments for next year. And
really,
like that more investment firms are going to start buying commercial properties because it's a nice stable 7% versus a spiky, stock return.
And on the single family side, I'm sure it varies very much based on where you are. Like, I don't think condos in Florida are appreciating 4%.
So condos in general, in most of the markets that are surveyed, are down. 95% of them have had price decreases overall this year. So condos are not faring well. It is, you got to be careful when your clients are getting into a condo association to make sure they know what they're getting into. We've talked about this ad nauseum.
Oh my God. I ran into this yesterday. So a client, I asked, how is your condo? Oh my God, my homeowner association is so wonderful. They're great. They're really on top of things. They're just the best. Everything is great. Oh, wait a minute. We find out they don't have enough reserves. Oh, wait a minute. Now we find out that what was the other one? The new one. They don't have the proper insurance.
Right. Oh, insurance is a big issue. It's harder to get for condos.
Wait a minute. No. There's construction defects. I'm like, oh my God, your place is not perfect. Now I got to really scramble to figure out a lender that will do your condo because it's all about your condo, not about your situation now.
But where I live, I live in a condo. It was the only affordable place that we could find in the time we were looking for the salaries we had. So, there was like 150,000 difference between the condos, and then like a townhome would be the next step up on the real estate ladder. And it's worked out well. We've lived in the same place for 20 years, but exactly right. There's a lot of risks. Like, how are they
Yep.
governed? You got to look at the numbers. What do they do special assessments? And I think the insurance market for condos has become it's worse than the homeowner side.
Are
Uh,
you on the board of your association, Mark?
What I'm actually on the board of my association, and
Smart
that
man.
helps keep my finger in the pie. And I'm always one saying, do we have to spend this? Because everything, your condo fee is like, this is where you want somebody frugal on the board of your condo, because otherwise it's easy to spend other people's money.
Yep. It's really easy.
Well, and again, back to my client who bought a place, got a cert when he bought it, saying everything's hunky dory, only to find out it was not hunky dory. And HOA dues in the 3 years that they lived there went from $400 a month to like 1,400 and something dollars a month. And they had an assessment of like 110 grand or something like that. So yeah, it is so important that we help vet these for our borrowers to the point where people who are buying and paying cash, I I think there's something to be said for what the the what we put them through and what they have to find out in the process of getting a loan. I think it's valuable for the borrower, and I fear for people who go into it not understanding at all what they're buying into. So anyway, all right. So I saw an interesting question that Rob Chrisman posed. Should all AI loan officers be licensed? And he said, I wonder what the regulators would have to say. And the regulators have already told us, Mark McArdle, that licensed brokers and LOs are responsible for any decisioning done by a computer and any answer that's generated. So as a former CFPB person, what are your thoughts on this?
I mean, I think the model's going to be changing. I mean, as it is, you need a human in the loop, and that's going to be the LO who signs off on the loans. But the workload for that LO might be different than your typical LO. If it goes through an automated channel, that's going to do most of the work. But you still need a human to go, yep, this is all right. I'm putting my name on it. So I think you'll see this thing where they have designated LOs who are the supervisory for the automated channel to the extent that people go that route.
Think the training is for those people though? Do they understand the ramifications of a computer system making a decision or giving an answer that they're responsible for? And then what happens when it all blows up and something goes wrong?
Right. Well, I mean, the L is one line. In a good company, there's multiple layers of compliance defense, including, we actually have AI testing our AI. So, as well as humans on multiple levels. So it's not just the LO. He or she is part of a team. But yes, he or she has to understand exactly what they're signing off on when they put their name behind it.
Well, we've all heard the saying, the blind leading the blind, Mark. So if you've got the AI checking the AI and you don't
As
have,
Yeah,
one
there we
tool.
go.
You got to think about what AI does well, which is it processes lots of information clearly. It can flag things, and then you, the human, can look at the things it's flagged. But humans make mistakes all the time too. Would you rather a human person look at 10,000 files? They'll also find errors there because how many times have we all come across fat-fingered mistakes in our loan files?
Never. None of mine. That doesn't happen.
so
My
I had an
initial
interesting one with I had an interesting conversation with a rep yesterday. We were talking about doing see if they could do an equity line for my client. And her response was, well, what you need to do is sign on to our program, input all the data, and the AI will tell you whether or not you can do the loan. I don't know what they look at or not. It's just this is how they do it. It's all kind of put the numbers into the system, in the box, and then the magic number comes out yes or no. And she couldn't tell me what the guidelines were. She couldn't tell me anything. I'm like, she just wanted me to put the information in and see what happens.
okay,
I think
so
eventually these models have to be transparent, and to the extent that the
Yeah.
decision, they have to say, we rejected this file because of X. And the Bureau did issue guidance to the effect that if you want to apply to the adverse action notices, you can't just say the machine said no. You have to say, the machine identifies your income being inadequate for the loan or XYZ, or,
Yeah.
and therefore our LO can look at a line. It's horrifying that someone would just accept an answer without any more detail besides yes or no.
I just say if you're an AE, learn the guidelines, understand what your company does. That is so lazy. And I would understand if they said, listen, this is brand new and I'm just learning. That's one thing. But if this is their answer, because first of all, as an LO, do you want to input all that information into?
No, that's exactly. I stopped at that point. I
Yeah.
just next lender. I'm gonna go to a different one because I'm not gonna waste my time entering all that data only to get maybe a yes or a no. Like I want to know before I put the data in the system.
I don't know who that was, but holy moly. So, Mark,
I won't mention any names or
that's
companies.
as a former assistant director of the CFPB, I have some questions for you. You ready?
Okay. Yeah, I'm ready.
So let's start with okay, so we all know that it's been gutted, that we got all sorts of issues. So enforcement, is it happening over there? And if so, I mean, can we have people put CFPB on their letter and have it mean anything anymore? Is there anyone there who's catching the complaints and like trying to do something to help the consumer? What's
So
happening?
the complaint database is still up, and I still encourage people to use it. It forms a record of companies. I don't know the actual level of enforcement that's occurring now. I mean, I hear contradictory things. They've transferred some of the actual cases to DOJ. That's been widely reported in the news, but they're also doing some investigations of their own still. So I've heard some of it's restarted. As you know, there's a bigger cloud over the CFPB. There's rumors that that the director of OMB, who's in charge of CFPB, has said he can't draw funds, and so if they can't draw funds, he said they'll run out of money at the end of the year, and which means he may end up furloughing staff and shuttering the agency for some period of time. That will undoubtedly be decided by the courts because it involves his interpretation of whether the Fed
Mhm.
has net earnings or gross. He says there's no earnings because the Fed has actually been running at a deficit since 2022 or so,
Yeah.
and therefore we can't draw. But that means that he's using the net definition as opposed to gross earnings. Obviously, the Fed pulls in money all the time, and like a property tax, we take a share of that. So that is what the courts will have to decide. Some courts have already ruled that that his interpretation is not correct, but we'll see where it ends up. It is undoubtedly going to the courts.
I can imagine if all agencies had to follow the same rule, that we would see a lot less government spending on stuff and stop spending into a deficit if they had to only spend their net income.
Well, that the government as a whole, as you know, runs a huge deficit, but Congress
Uh-huh.
authorizes it. At least the most regulators operate off a fee income
Right.
basis. So they charge the people they regulate a
Right.
fee, and that's how they operate. We piggyback onto the Fed's fee. It's so that when the Fed charges all their institutions for their fee, so that's actually paying for your own regulation, which makes a lot of sense, and
Mhm.
therefore doesn't burden the general taxpayer. But
It's
yeah,
also the
so
same way the federales work in Mexico when they pull you over and they find out how much money is in your wallet and oh, wait a minute, that's the bail for one person. The rest of you have to sit in jail while one person can go out to their ATM and come back with the money to bail out the rest of the people.
That's exactly how the CFPB started, Mark. They did
yeah,
a balance sheet and charged what they thought they could get away with, and then, there
no,
you go.
no, no. I mean, as you know, the federal the CFPB, that's not how they started.
Okay, well, I'm not sure about that, but we can move on from there.
I know.
Okay,
I think I definitely know some people who've been shaken down by Mexican federales.
so
I think it's the same thing.
but this was in the very beginning, like this is when it first started. But yeah, we
Remember, the money we charge, let's say there's an enforcement case, by and large, that money goes to consumers. It's not part of our operating budget. We don't have a, eat what you kill type model. It is our funding source is the Federal Reserve.
I no, we understand that, but I'm telling you, there was a now and there was a then. So a very beginning then. All right. So trigger leads. California is working on a bill. The California Association of Mortgage Professionals is working on a bill for trigger leads. And there are several other states who have done bills that address the trigger lead issue that went into effect before the federal law was passed. So we know that trigger lead bill is supposed to start being enforced March, whatever. No, May, March,
March.
I think. But we also are unsure who is supposed to enforce that. You've read the whole thing. Who's
Yeah,
supposed
well,
to
it's not a lot, but remember, the Trigger Lead Bill amends the Fair Credit Reporting Act. So FCRA is a bill is a law that has joint enforcement at the federal level. So it's the FTC and the CFPB. Now, the CFPB is the only one of those two agencies has supervisory authority. So we used to check the credit bureaus to see, if they had the controls in place when they did the pulls. That won't happen, but you can still make complaints to the FTC when this law becomes effective, or the CFPB in whatever form it is at that point. And either one of those will do it. Now, states are passing their own laws, as you indicated, and some passed a law before the federal law, like Idaho. Now, that means the state can enforce their own law as well. So that means the state agency can come in and do that. But with FCRA, state enforcement authority is a little more dicey than other laws because it has a state preemption thing. But
I just think it's interesting that a bill would be passed with no clear path to who oversees it.
well, I mean, like I said, it amends FCRA and it doesn't have to specify because FCRA already says clearly that both the CFPB, and the CFPB and the FTC have enforcement authority.
Yeah,
Texas passed it. Yeah, there's at least a half dozen states with their own laws, more probably.
and what I was surprised by it was Texas, it was Idaho. The states that we typically think are more conservative are all over this. And
Yeah, Republican, Democrat, no one wanted to get 100 calls after you got your credit pulled. So this was annoying. This is a bipartisan annoyance issue.
we heard through the grapevine that what finally pushed it over the top was there was a congressperson who got over 2,000 solicitations and I mean, how's it even possible?
I
So,
haven't seen a number that high, but we've had when I was at the bureau, we've had lenders say, "Here, here's the call log of a consumer who shared it with us. Here's all the calls they got," and it was literally 200 in a matter of days.
oh yeah,
So I mean
Yep,
and these are
that's
not
pretty regular.
real offers of credit, right? They're there's no way they could make a firm offer of credit based on what they in that time period.
well, and when they call and they say that, your loan officer told us that they can't do your loan, but I can. Send me all your information.
Yeah, yeah.
I kind of think those people should be, put in the thumb screws. All right. So I understand that you are now the proud member of NBA's Residential Board of Governors. Their acronym is hilarious. ResBog, really?
Yes, it's not the greatest, yes, but there it is.
That little gem, huh? Okay, so tell us about ResBog. Tell us why they're important. When you were telling me about this, I was very happy that you're on this
Yeah,
board.
so yeah, as you know, I work for Newrez now. I do their policy and regulatory affairs, so I interact frequently with MBA and HPC. And they had a vacancy just recently, and so I've been added to the ResBog Board of Governors. So that's their group that sort of decides on which directions, which issues the NBA should push. So we've been talking about trigger leads. That issue originated with MBA, at least at the ResBog level, where a member of ResBog said this is a huge matter. I get complaints from customers all the time who think I sold, their information, and they're complaining to me, and someone has to do something about this. And MBA took up that call and had been advocating for this bill, as you know, for at least 2 solid years before it passed, and it always came close, but never quite got over the finish line until recently. So. Some of the issues ResBog is working on now include what to do about credit scores. As you know, credit score costs are going up, and lenders, you told me before the show about like how lenders are trying to decide how to handle this cost, which they can't just eat all the time now because it's astronomically increasing. MBA has advocated for a single pull instead of the tri-merge because that would create competition between the three credit bureaus, Equifax, Experian, and TransUnion. This whole area is an area where there's not a lot of transparency. Anyone will tell you nobody takes full ownership of what part of the costs they're passing on. FICO is one piece of it. The three credit bureaus are a big piece of it, and then there's finally these resellers on top of it. So it's this totally not transparent stack of people all taking their cut. And as you guys know, as LOs, the costs have just gone through the roof. And in the end, the customer pays that one way or the other. You either pay it. Either the successful customers are subsidizing everybody else, or you're going to have to find another model to somehow recoup these costs because it's I think something has to change. I think the MBA model is worthy of consideration because this is not sustainable.
I think that one bureau is enough. I mean, not every lender reports to every bureau. So how does that get reconciled on their
Well,
end?
there's a lot of overlap between the three bureaus. The way they were thinking about doing this is if you're above a certain credit score, you need the final file would only need one pull, not three. So let's say you're above 700 because there's less risk with that loan in general. And remember the way the tri-merge works, it's not like it's an average of the three scores, it's the middle score. So that means it's not necessarily the right score. So if there was let's say only one of them got the full picture, you'd still be taking a risk with that loan. So I think in general, we should think as an industry about how to move beyond credit scores in general for underwriting. As you know, the GSEs don't use credit scores. They use sort of holistic evaluation. I've always talked about cash flow because it rewards frugal people like myself. Because, when you look at things like DTI, debt to income, there's no S there. There's no spending. So, the person who takes 4 trips to Disney World every year and the person who takes none, there's no way to sort of separate out those two. And there's so many costs that are not covered. And, daycare, like if you have a small child and you're paying daycare, that's thousands of dollars a month that you won't see on a traditional DTI number.
So for those of us who have been in the industry doing loans since before credit scoring, I've long said, like, I don't like it, honestly. I know that lenders like it because it's something that's
Makes it easier.
black and white.
Yeah, it's a number.
It's a number. It's very quantifiable. But, it's hard to underestimate that gut feeling that I get. So the number of borrowers that I turned away prior meltdown cannot be overstated. I mean, so many. And some of them had 800 credit scores because I would look at their situation and say, okay, yeah, I know I can get you a loan. I know you technically qualify, but you have $125,000 in revolving credit card debt. And this is like early 2000s. Mark McArdle would have had a heart attack if he had seen that. But we see it all the time. So when I would see that, or I'm like, have you thought about what your PG&E bill is going to be in that sheetrock mansion that you're buying with no insulation? Or have you thought about this or that? Or so the credit scoring thing for me has always just been like, are you serious? And especially because I've seen so many situations where you have somebody who has a perfect credit history except for one late. Well, you have one late with the system.
One Macy's late for a pair of socks that they bought because they got a special discount or something. Like I've seen that, and it just wiped out their credit scores because they forgot. They moved, they didn't change the address on the Macy's bill, never got the bill, and then
I heard of a story of someone who's like the dentist charged their child for a dentist bill. They never got the bill. The bill went to a credit agency. Their credit score had a huge, and they had to take months to resolve it, but their credit score dropped 100 points because it became this ballooning debt.
I had that situation because my clients had paid off their bill, but there was 76 cents in interest. And the dentist did not send out bills for anything under $1. So the client never gets the bill for the 76 cents. It goes to collection and decimates their credit scores. I mean, the whole system is such a mess.
One thing just on this tirade, and then we can let it go. But so I have a friend who used debit cards for everything. Debit cards don't. She always said, but this person paid everything on time, because debit cards don't let you go into debt. But her credit score was nothing. She was invisible to the bureaus because she didn't have any debt. And she had to go out and get a normal credit card just to push up the numbers, even though she liked debit cards. She liked the fact that she couldn't run a balance. And that's the system rewards debt. It's as a frugalist, I'm insulted.
Okay, so Mark, cover your ears, but we have to ask this question. What is this gives Mark palpitations and not in a good way. So what is everyone going to do in 2026 as your credit costs increase 45 to 100% are the numbers I've now seen? I mean, are you planning to charge up front? Are you planning to leave it the same? What are your thoughts on this? And again, Mark doesn't like this idea because we know that when people are paying up front, they're not shopping as much, which the regulators are huge fans of. For those of us who work for free until we close a deal, we're not such big fans, because for those of us who are doing the right thing and we're taking great care of our clients, that is, somebody starts saying, what is your rate? If that's our first question, I hang up on them basically. So I'm curious to hear from our listeners and to see what everyone's doing.
I've talked to other LOs, and there's some now, as a growing number, that are collecting the credit reporting fees up front.
I was telling Mark that we've asked that question for over a year in our classes that we teach, and that a lot,
Mhm.
like almost half in some classes, and they're having no pushback at all. Yet
Yeah.
it is hard for us to like it's hard for me to do it. Like
But
I,
not only are they not getting any pushback from charging up front, they're also not losing those clients to someone else who's offering a better rate in the middle of the process because
well,
they've already kicked in the $100 or $200, whatever the number is, and they don't want to spend it again.
let's talk about that better rate idea because a lot of people are promising a better rate, but they're like, once you get an actual locked LE, the fees are through the roof. I mean, a lot of those other solicitations are complete bupkis and it's all smoke and mirrors. And so you've got to really watch that. And does that actually benefit the consumer? And also in a place where we've got a declining interest rate market potentially, we're always thinking about EPOs. So we get hit for them. Nobody else has to
Mhm.
pay for them. The guy who gets a salary every 2 weeks doesn't have to pay his income back, but we do. So we are trying to do the best by our clients at any given moment if we're smart, because we want to have the lowest rate so it's a longer road to the point where they'd want to refinance. You know what I mean? Did that make sense?
No.
Okay. Haven't understood or not is irrelevant. Mark, what do you think?
No comment.
Okay. Oh, really? Okay. Anyway, bottom line is I want there to be a bigger gap between today's rate and a time where the rate might be more attractive to a borrower. So if I lock them into something and close something now that's higher than it should be in today's market, then when the rates go down, it doesn't take as long to get to the point where they're like, oh, I'll take that lower rate. That's what I'm trying to say.
But
I get what you're saying.
the one thing you said that I totally agree with is you should totally look at all the fees, everything that's going to be charged, and that's part of your comparison point because the rate is certainly not the APR helps, but the whole package when you get a full LE and you'll know exactly what they'll be charging you for all the different things.
So Bill has a comment, Audrey, I haven't seen, where the assumption that the cost of credit reports will elevate 45 to 100%. So we had Tracy King on a few weeks ago. She is with Partners Credit, or no, we didn't, that's not when we had her on. I texted her last week to ask her. That's what it was. Anyway, so she said 45% at least. And then I have seen up to 100% on LinkedIn all over the place from a
Yeah,
bunch of different sources.
I've heard confirmed 45% from resellers. So that's the minimum.
So I'm thinking, Audrey, Mark, you're gonna have to plug your ears, but I think LOs should actually tag on a fee for pulling the credit report also, because if different levels can charge fees at whoever is pulling it, I don't see why for pushing that button, I should charge a fee. What do you think?
Okay, so I'm just going to remind you that we remind our students every year in an MLS class that you can never ever add anything to a third party fee ever, ever. So you're talking about like,
Ever. But I'm not charging a third party fee. I'm charging a fee for ordering the credit report.
that's
That's
like,
all I'm charging a fee.
that's a bank charging an application fee or something, right?
Yeah,
Somehow seems okay.
they can do it because they have a better lobby than we do, apparently.
Yeah, no kidding. Okay, so I have been bugged, especially the conversations that I see between the people who are, like owners of companies and just below owners of companies. Um, I'm really concerned about our industry because it's all focused on how much money they're going to make next. That's it. I hear so little conversation about the borrower and what's good for them. We are an industry that is completely dependent on refi booms. And we have so many people with their hands out wanting to be paid, thinking they're going to make a killing. And instead, we should be thinking about how do we simplify, how do we streamline so the cost can go down. They keep saying it's all the LO's fault, which I'm so sick of that conversation, because if you talk to borrowers, and we do talk to borrowers and we talk to other LOs, and none of us are closing deals that could happen just pushing a button. And so the LOs are important in most conversations, even refinances, Mark. So I think that all of these people who have entered the industry to make a ton of money on the backs of the consumer and own private jets, and it's something's got to shift in our industry, I think. So I don't know how that's going to happen when the
I
people in
think what they need to do is cut back on the peanuts served on those private
I know
jets.
exactly. Apparently those peanuts are a big, big deal. Um, okay, so Mr. McArdle. So we have this guy in charge of FHFA, Bill Pulte, and he's had a lot of ideas lately. We've talked about all of them on here. Uh, but he's not doing great out there. I mean, he doesn't seem to have the support that he did have. What are your thoughts on all that?
I don't know what his level of support is or isn't. You know, the administration seems to be doing two different things. One, they talk about releasing or doing an IPO at the GSEs, which would require them to be fairly as profitable as possible. On the other hand, they're worried about affordability, as we all are, so they're trying to use every tool they can to lower, the overall cost of housing. It's hard to do on the demand side because, I mean, as you know, it's essentially a supply issue of housing and pricing. But if you lower, if mortgage rates suddenly drop, people could just then bid more for the houses that were there. But they're using what tools they can. Some of his ideas, though, have been widely criticized. The 50-year mortgage would end up, basically you'd build equity so much slower. You'd be paying so much more in interest, and there'd be a premium to that because it's a longer term, from the investor side that you might not even get any savings at all. So some of these things don't make a whole lot of a sense. Others sound good, like assumable mortgages, but unless the house you're buying is the same price as the house you're leaving, there's going to be this gap and a complicated financing, arrangement, as we all know already with FHA and VA loans that they're very hard to actually assume because unless you got to make up that gap financing somehow. So you wish there was more of a process, instead of just throwing ideas out there, like, some sort of more organized idea so people can focus on what's going on. But it does seem like they're going in two different directions sometimes.
Yeah, it definitely does. I mean, I've asked guests, do we give people credit for having ideas at least or trying to come up
Yeah.
with
I mean, I'm all for throwing ideas out there, but you'd wish there'd be more of a process, solicitation. They used to do things like RFIs where they say, here's some ideas, give us some feedback, let's run a normal sort of process. And then instead it's like this, let's post something on X and see what happens.
Yeah. I got a resounding no from the last couple of people I've asked, so I'm thinking maybe, not so much. Are you familiar with the Housing Policy Council?
Yeah, we are a member of the Housing Policy Council.
So when the conforming loan limits changed and were increased officially, they released a statement that I thought was interesting. And I wanted your comment on it. So they said the Federal Housing Finance Agency announced its new conforming loan limits today. Unfortunately, limits this high contribute to house price inflation and displace mortgages that can and should be produced as purely private market transactions with mortgage backed directly or indirectly by taxpayers. What are your thoughts around that? Like, I thought that was, yeah,
So there's
explain.
a school of thought that right now we have extremely high levels of government involvement in mortgage. So the FHA and VA are a good chunk of the mortgage market. The GSEs are the rest, more or less. There's a small private market and some portfolio loans, credit unions and banks, usually the highest quality. All so the GSE, FHA, and VA are all backed by the government in some way, directly or indirectly. And there's an argument for many that there should be more of a private market. We're talking about collateralized lending, and should there, would there not be a lender who could make that loan? And what should be the role of the GSEs versus what should be the role of private lenders? And when you're talking about the high cost areas, the GSE limit will be 1.2 million. And there are, as you know, there are, including my company, we do private loans. We do loans that are not GSE, not VA, not FHA. We also do all those. So the idea is, what should there not be some part of the market that the government doesn't have to subsidize indirectly or directly? And as you know, the GSEs do second homes. The GSEs do lots of homes that aren't in the core mission of home ownership. And so that is the idea behind what Ed DeMarco is saying with that statement. He was very consistent when he was the head of FHFA that, he thought the GSE footprint should be limited. We need them there. They're an important source of liquidity, especially when the market turns south. Like if things go bad, you want a
Yep,
GSE to be
they're
able
the
to
only
step
ones left.
up.
Yep.
But when the market is good and there are lenders willing to make those loans, it's hard to compete with the GSEs because they have such structural advantages and a government guarantee, essentially, that, a private lender can't compete. I mean, it is weird for a country that is so overtly capitalist to have essentially, a very socialized
Mortgage
mortgage
system.
market.
It's interesting though, the high balance loans, so we're in the high
Jumbos.
balance market. Yeah. Not jumbo, the high balance more
Oh,
conforming. Okay.
When
Where
what
Audery and I both have the same agreement on this one, I'd say we don't do many of those high balance loans. There's two reasons. Number one, the LLPAs kind of make them unprice
yep,
friendly. Um, and it's oftentimes cheaper just to go get them a jumbo loan.
yep.
Uh, so that being said, oh, they have these high balance loans and the government's not doing those, but those are also capped. And that's where we run into a problem is it's why our company had to expand because we were a California-based company, but we couldn't stay in California only because we were only allowed, I think it's 5% of our loans could be high balance. I don't know the exact percentage. I might be off by a number or something like that. But we were running into that cap on a regular basis. So therefore, we had to expand outside of California into states where they didn't do a lot of high balance loans. So therefore, we in California could do more high balance loans. But now, because of the LPAs, we're not even doing many of those anyway.
Yeah.
The
Well,
pricing isn't there, and
tell me if there's ever a day where there's not jumbo financing available, and I mean, as long as you can get a jumbo lender to make that loan, some would argue that's not a bad thing because that's a
right,
totally non-subsidized loan for that loan. There's
right.
no,
But there are times when that market disappears.
when
COVID,
and then you need the
a couple
GSEs
days
to be able to
after.
step in. I think the ideal world is the GSEs have the flexibility to be able to step in when needed, but lets the private market act when it can,
Hmm.
especially for the edges of the market, like second homes, high
okay,
value loans, etc. I know
I
your
Dying to
folks will
jump.
disagree, but
Audrey
not
is dying to jump in here.
well, here's my problem. So why is it that only somebody who has a small loan amount and presumably a simple, easy to qualify income they're the only ones who are entitled to always have a loan available? Because we saw evidence of this immediately when we went into lockdown in the markets. We lost jumbo and we lost non-QM overnight. And it was during that time that you realize how important the GSEs are because they were the only ones that had any money, or the government backed
I'm
the.
not disagreeing. That's their role. They're counter-cyclical. They're there when things go bad, and the FHA is there too. Unfortunately, in 2009, the GSEs went bust too. So the only one making loans were FHA. So
But again, who decided that that small segment or that segment of borrowers, they're entitled to an implicit guarantee from the federal government versus somebody who has a higher loan amount is totally SOL. That's a technical mortgage term. You should look it up. So I don't think it's
I'm
fair.
just saying, in most parts of the world, people make mortgage loans without the government saying, if you default, I'll step in and make you whole. I mean, the fact that this is collateralized lending. You should be able to make a risk decision and not necessarily have the government back every loan. This is not normal in other countries. So
Well,
there, I like I
countries,
said,
you also can't do a 30-year fix. And in other countries, when the rates go through the roof when your loan expires, then you either have to figure out how to pay a much higher rate or sell the place. So I've been in the UK and had these conversations with people when rates were at 8% and they had previously been in the twos, and they were literally having to sell all their properties and move out of the country. So I don't know, like, does that work either? Maybe there's some happy medium in here. But
like I said, I feel like we have a great system. They just should think strategically about where and when it's used. We have private lend a system, we have GSEs, we have the government space, and to think about, we certainly don't want them competing for the same loans. To think about like where they make sense, where the government guarantee makes sense. And I'm all for the GSEs leading innovation, which they've done. Cash flow underwriting is being done at the GSEs. The private market should also be doing more of that. We want an efficient mortgage market that covers the whole spectrum. And that would, I think, be the goal.
yeah, I know it's the goal, and I know it's complicated. Like, I don't think there is any easy answer in this, but again, I'm frustrated by the idea that somehow there's this little segment of people and they're protected, and then everybody else is left out to dry. And that seems okay because what? Their loan amount is over a certain amount, or you know what I mean? Or their income is not is quantifiable in a GSE compliant way. It's not, it doesn't make a whole lot of sense across the board. It yeah,
Yeah.
I don't know. I don't have an
Hey,
answer.
I have a closing question that's been killing me this whole show. And that is the picture behind Mark, the way that guy is holding the Subway sandwich. That is no way to throw a sandwich because he has to
No,
hold throw
yeah,
it.
and I believe it
And
was
so
wrapped in
that's
the actuality. Yeah,
yeah, well, I'm just saying the way he's holding it, it's just
all
gonna
the
fly
toppings
open.
would come
It's
out. Yeah, it would
everything,
not
yeah,
be a very
everywhere. There's
effective
gonna be
projectile. Yeah.
condiments everywhere. Versus if he threw it like a football with the other way around, see, with the Subway behind it, then it's going to be more of like a missile coming at you, and then it's more of a weapon. But he's just throwing like lettuce. That's what he's doing. Just
Well,
an
This is
observation.
listen, if you're storing a Subway sandwich and you're being bummed with one of those, that may actually be a crime because I've heard a doctor say that Subway is not food, it's food particles. And
oh,
in that maybe they're not as healthy as maybe they cleaned up their act. I don't know. Like that
Especially their lettuce. That is purely food particles, the lettuce.
well, there you go. So
Actually, I got it's a little side note on lettuce. Because, side little hustle. I am president of a charity that serves seniors meals. We're not allowed to serve lettuce to the seniors. We don't get any money for serving lettuce because it has no nutritional value.
it has fiber. Isn't that nutritional value?
Nah, well, iceberg lettuce has zero nutritional value. We're not allowed to serve it.
Wow, wow, and wow. All right. Well, kids, there are a lot of loans being made, and there is an expectation that 2026 is going to be busier, whether you're doing refis or purchases, but not if you're sitting on your tail waiting for the sun to shine and the phone to ring. So you cannot take December off. Do you hear me? You need to be working right now. It's still part of the year. So if you want to not be sucking air in January, you need to keep it going right now, be working on a plan so that you have an idea of how you're going to manage the next year. There are loans out there. None of them are easy, which I'm grateful for because they can't be done by pushing a button or a computer. And so go get them, kids. Go get them. All right, Mark, we love you. Thank you for being here. I'll wait
thank you
till
for having me.
we'll look forward to seeing you next time.
Enjoy the weather.
But we will.
uh,
Good.
bye.